If you hold any dollar assets, your savings, your 401ks, your bonds, what's happening in the markets right now could either protect your wealth or leave you financially devastated. And I've uncovered one stock that's positioned to be the ultimate safe haven as this crisis unfolds. I'll reveal the ticker symbol in just a few minutes, but let me walk you through what just happened and why it mattered. Now that we're in 2026, we're witnessing unprecedented developments reshaping the financial landscape. By the end of this video, you'll understand the critical events of the past week, see how they connect to America's $38 trillion debt problem, know the exact stock you should be looking at, and understand exactly how to position yourself no matter what happens. I'm Sam Putnam. I'm a former engineer and entrepreneur who spent years studying how companies operate and become valuable. I'm also the founder of Stocks Community, where we have students who have made $5,000 and $10,000 in just a few weeks. Now, these were exceptional students, and I don't make any income claims, but we give you investment ideas that are better than anything else anybody else gets. I've dedicated my career to teaching regular investors how to protect their wealth from the schemes and the financial engineering out there. And you can see I'm a regular everyday investor just like you in the daily live streams I do here Monday through Friday on YouTube. So let me walk you through what happened this past week. Bitcoin surged to $93,700, up more than 7% in just days. Gold jumped over $30 to reach $4,478 per ounce. Silver rose nearly 4% towards $76 per ounce. With some sources reporting prices above $80, the S&P 500 hit fresh all-time highs, while the Dow headed for its first close over 49,000. The geopolitical shock triggered a massive flight to hard assets, exactly the behavior pattern we need to understand for what's coming. And this is where that one stock I mentioned becomes critical. As we enter 2026, the U.S. is staring down a 120% debt to GDP ratio. The national debt has now reached $38 trillion. That's $280,000 per household. And we're now paying nearly $1 trillion per year just in interest payments. That's more than we spend on national defense, more than Medicare. We're not paying down the debt. We're just paying the interest on it. We are literally borrowing money just to pay the interest on the money we already borrowed. It's a debt spiral. So what are the options? Austerity, cut spending dramatically, raise taxes. Politicians who campaign on cutting Social Security and Medicare don't get elected. It's political suicide. Default. If the U.S. defaults, the entire global financial system collapses. Banks fail. Retirement accounts get wiped out. It would make 2008 look like a picnic, and nobody wants to be the president who makes 2008 look fun. Grow out of it. The Congressional Budget Office says we need 3.2% real GDP growth every year for 30 years straight. We haven't sustained that kind of growth since the 1960s. So yeah, good luck with that. That leaves only one option. Inflate the debt away. Make the dollars you owe worth less than when you borrowed them. Pay back your debt with cheaper money. This strategy is called financial repression. And JP Morgan Private Bank just warned in their 2026 outlook that this is exactly what's coming. The government is going to allow inflation to run way hotter than they say it should be. They're going to keep interest rates lower than they say they should be. These things are going to quietly transfer wealth from your savings accounts to the government's balance sheet. You won't see a bill. You won't get a notice. But every year, your dollars will buy less and less, and the government's debt burden will be less and less. Recently, 61% of Americans said policies have worsened economic conditions, yet markets are rallying. Why? The Federal Reserve cut its benchmark interest rate 3 times in 2025, and economists are forecasting additional reductions in 2026. And here's where it gets really interesting. We've seen extraordinary moves in precious metal. Gold surged 66% in 2025, its best year since 1979. Silver jumped 142% in 2025, with Bank of America seeing gold reaching $5,000 an ounce. Central banks are buying more gold than at any time in the last 50 years. They know something. And for years, gold and silver investors complained about prices being suppressed. They were called conspiracy theorists. The tinfoil hat crowd. But major banks have been caught manipulating precious metals markets through spoofing, placing massive fake sell orders to crash prices, then buying at the lower price. JP Morgan and HSBC at their peak controlled over 85% of the commercial net short position in silver futures. 2 banks controlled the entire market. 2 banks, not 200. Two, analysis shows that if you avoided just the New York morning trading session, when most of the manipulation happened and only held silver during Asian and European hours, your return would be nearly 20,000% since 1970, compared to just 1,600% for the actual market price. Same silver, just different hours, performed 12 times better. But that suppression is ending right now. Central banks worldwide have bought over 1,000 tons of gold annually since 2022. That's double the decade average. China implemented export controls on silver at the start of this year. Industrial demand from solar panels, electronics, and data centers is eating into supply. And when physical metal can't be delivered to everyone who wants it, the paper price becomes meaningless. The physical price takes over, and that's when suppression ends. And that brings me to the stock I want to talk about today. The ticker symbol is B. That's it. Just the letter B on the New York Stock Exchange. It's Barrick Mining Corporation, formerly known as Barrick Gold Corporation, until they changed their name in May 2025. Let me tell you why B is the best positioned gold stock right now. Right now, B is trading around $45 to $46. The stock has climbed approximately 154% in 2025. That's not a typo, 154%. But here's why this is just the beginning. First, B has a strong buy rating from 6 analysts with a 12-month price target of $47.17. But some analysts like Jefferies just raised their price target to $55. That's around a 20% upside from current levels, and that's the conservative estimate. Second, the company just posted earnings of $2.14 billion, an increase of 68.55%. Their revenue in 2024 was $12.92 billion, up 13.38% from the previous year. This is a company that's executing. Third, and this is crucial, Barrick is planning to evaluate an initial public offering of its North American asset. This includes their 62% stake in Nevada Gold Mines and their 60% stake in Pueblo Viejo. These are tier 1 assets in stable jurisdictions. If this IPO happens, it could unlock massive value because the market will value these North American assets at a premium compared to assets in riskier countries. Barrick would maintain controlling interest in the new company. The market re-rating could be enormous. Fourth, activist investor Elliott Management has built up a substantial stake in B, positioning itself among the company's top 10 investors. When activists get involved, especially ones as sophisticated as Elliott, they push for shareholder value. They push for better capital allocation. They push for structural changes that unlock value. This is happening right now. Fifth, Barrick just repurchased $1 billion of shares and expanded the buyback authorization by $500 million, taking the program up to $1.5 billion. They're also paying dividends with a yield of about 1.5%. So you're getting paid to wait while gold continues its march higher. Sixth, the company divested non-core assets like the Tongon gold mine in Côte d'Ivoire for up to $305 million. They're concentrating capital on tier 1 assets in better jurisdiction. Focus, discipline, returning cash to shareholders. And here's the kicker. With gold breaking through $4,400 per ounce recently, Barrick's cash flow generation is going through the roof. The company produced 829,000 ounces of gold in Q3 plus 55,000 tons of copper. They're not just a gold play. They're a gold and copper play, which gives them diversification that pure gold miners don't have. Why is B better than other gold stocks right now? Scale, jurisdictional diversity, tier 1 assets, activist involvement pushing for value creation, an IPO catalyst on the horizon, massive buyback, and a management team that's finally getting serious about capital allocation. Most other gold miners don't have all of these things lined up at once. Look, I'm not saying B is going to go up in a straight line. Nothing does. But if you believe, like I do, that gold is heading higher, that central banks are going to keep buying, that inflation is going to remain elevated, and that we're entering a period where hard assets are going to outperform, then you want exposure to the best positioned gold miner. And right now, that's B. Let me tie this back to the bigger picture. After a choppy end to 2025, cryptocurrency staged a remarkable comeback. Bitcoin rose to its highest level since mid-November, with analysts predicting it could hit a new all-time high by the end of January 2026. Bitcoin has been pushing toward the $100,000 level with strong momentum from institutional investors. US GDP grew at an annual rate of 4.3% in the third quarter of 2025, handily beating economists' expectations for a 3.2% increase. But here's what they're not telling. This strong growth is happening while the labor market is slowing. With payroll growth falling substantially and nearly 90% of net private job creation through November occurring in a single sector, healthcare and social assistance, the economy is being propped up artificially. Every major empire has faced this moment. Rome debased their currency. Inflation came in. The empire collapsed. Britain lost reserve currency status after World War II and devalued the pound by 50%. Now it's America's turn. Here's the real strategy behind crypto and why the government is so bullish on it. Stable coins create tremendous demand for government bonds. When Tether or other stablecoin issuers receive dollars, they don't keep cash. They buy U.S. Treasury bonds. This solves the massive problem that China, Japan, and other countries have stopped buying U.S. debt after what happened to Russia's reserve. Here's how it works. Say you're Tether. You issue these stable coins, and that means you receive $1 in cash, and you give somebody a USDT, which is a Tether stablecoin. You still have the dollar in cash. The dollar in cash doesn't make you any money. So what do you do with it? You buy government bonds because they're safe. And now you're collecting, say, a 4% interest, but it's not your money. So you're making free 4%. But from the government's point of view, what have they just created by boosting stable coins? They've created tremendous demand for government bonds. The problem is that China was the biggest buyer of US government debt. They're not buying it. The Japanese are not buying it. The Indians don't want to buy it. Why not? Because of what they did to Russia. Russia had foreign reserves in the US and in Europe, and those reserves got seized. So who in their right mind as a country would put their money into somebody else's country? So the only thing that you can hold at home is gold. One of the reasons I'm so bullish on gold for the next couple of years. Yeah, and why B, the gold miner, is positioned so well. The end game? A crisis that forces the transition to central bank digital currencies, or CBDC. Perhaps a banking system hack, some sort of major financial calamity that means the banking system doesn't work. ATM systems could go down and they'd blame the hacking on North Korea or something like that, because it's always North Korea, right? And then suddenly the government comes out and says, hang on, no worries, we got a solution for this. We're going to send you CBDCs into your phone and you can pay with it as normal and people will accept it. Problem, reaction, solution. Tale as old as time. Inflation is expected to cool to about 2.4% in 2026, according to forecasts, but that would still leave inflation above the central bank's goal. Here's what's really happening. Inflation erodes the value of money and debt. That $38 trillion becomes worth less. Meanwhile, inflation increases the prices of stock, real estate, and other assets that the wealthy hold. What happened in the 1970s? We saw massive inflation, and you know what else happened? Gold went from $35 an ounce to over $800 an ounce, a 22 times increase, and gold mining stocks did even better. That's the playbook we're looking at again. Let me give you a history lesson. After World War II, U.S. debt hit 106% of GDP, actually higher than it is today relative to the economy. How did they bring debt back down to just 23% by 1974? That's an 83 percentage point drop. Did the government pay it off? No, they inflated it away. From 1945 to 1951, the Federal Reserve capped long-term bond yields at 2.5%. Meanwhile, inflation was running at 6.5% per year on average. If you're a bondholder earning 2.5%, but inflation is 6.5%, you're losing 4% of your purchasing power every single year. Over 10 years at that rate, you lose about 34% of your purchasing power. Over 20 years, you lose 55%. Your bonds still say the same number of dollars, but those dollars buy dramatically less stuff. According to IMF research, real interest rates were negative more than half the time between 1945 and 1980. Financial repression and inflation accounted for roughly half of the debt reduction in the post-war period. Not growth, not surpluses, just inflating it away. This is going to happen all over again to a much larger extent. Today's government debt payoff playbook is identical to what happened after World War II. And it's going to destroy anybody with savings, anybody lending money to the government bondholders, and it's going to enrich people that have the right assets. So if you are a billionaire running the country, of course, I'm not suggesting that billionaires run the US. That would be laughable. Right? What do you actually want to do? You want to reduce the debt. So you cause lots of inflation, and at the same time, you'd like to get wealthier. You'd like your stock prices to go up, your property prices to go up. So what do? You cause more inflation. How? You print more money and you lower interest rates. What is the government doing right now? It's printing more money. It's lowering interest rates. Weird coincidence. Who does this affect? If you're asset rich, as in lots of money invested, you're going to do brilliantly. If you're a salary man, as the Japanese call them, you're going to struggle. What can you do? Move gradually into the direction of asset richness. And that might be $100 a week or a month invest. But the more you do it, the faster you do it, the better protected you're going to be. If you want a case study on it, study Japan. In Japan, the wealthy are very wealthy. They live a very good life. Everybody else is working on 1970s wages and is struggling. Now, before I wrap this up, there is one thing I see in almost every single portfolio I've looked at, and I've looked at thousands of portfolios. That is the lowest hanging fruit. That is the number one skill that would change their outcomes by the most. And it is not what to buy. Everyone asks what stock to buy. It is the selling. The reason is simple. You sell your winners because you're scared of losing money. So you sell them with 20, 30, 40% gains, and then they continue going up another couple 100%. But what you never sell are your losers. So that 5% down becomes 10% down, 30% down, 50% down, 70% down. Anybody bag holding something right now? Yeah, me neither. It got fixed for me through understanding when to sell, understanding the rules that Wall Street uses, because they don't have the luxury of holding losers. They need to make money every quarter and they need to report it. Otherwise, they get fired. And at Stocks Community, we give you daily stock ideas on what to buy right now. You can try it for 7 days and see if our approach works for you. So here's your action plan. Own more assets. That's the only path forward. Low-cost index funds like VTI or VOO. Individual stocks if you understand when to take profits. Real estate with fixed-rate debt. Real estate is a hard asset, and when you use debt on it, your real estate appreciates. You get cash flow, and over time, that debt, the value of the money that you borrowed, gets inflated away. You're playing the government's game to your advantage. I'm extremely bullish for the next few years. And specifically, if you're looking at gold miners, B is the one I'm watching most closely right now. Not as speculation, but as strategic position. This is a multi-decade plan. It's already happening, but most people won't realize it until it's done. Japan has already executed this playbook. With inflation, asset prices go up, but the value of your income goes down. The only protection is to move from being income dependent to being asset rich. The financial system rewards asset owners over cash holders. Full stop. If you're somebody that has a lot of cash, you're somebody that the government loves because the government is going to take all the value from the cash. They're going to fix all of their own problems, and the politicians are going to say, we're amazing. But if you look at history, you can see how this plays out. Asset owners get richer, the government gets their debt diluted, and everyday Americans with savings that didn't invest get screwed. Watch for these developments. More geopolitical crises that justify emergency measures. Continued Fed rate cuts despite strong GDP numbers. Further precious metal rallies as central banks accumulate. Push toward digital currencies after a necessary crisis. Growing wealth inequality. No matter who you elect, this is going to happen. Governments always protect themselves at citizens' expense. Your job is your preservation and your family's preservation. The past week has shown us the playbook in action. The S&P 500 has never been more expensive, yet risks are everywhere in 2026. The Dow closed at a record recently after the U.S. military strike on Venezuela, lifted oil shares, and renewed AI optimism lifted technology shares. Hard assets across the board, gold, silver, Bitcoin, and gold mining stocks like B all surged on geopolitical instability. This is the biggest transfer of wealth from the lower and middle classes to those who have the most money. It creates the most inequality we've ever seen, and it's irreversible. But you now realize it, so you have power. You can affect your own decisions. With inflation, asset prices go up, but the value of your income goes down. So the thing to focus on is owning assets. I'm going to be saying this for a very long period of time because this is a multi-decade plan and it's going to hit people after it's already done because most don't realize it. Now you realize it. If you got some value out of this, share it with a friend so more people are prepared. We can't affect the debt. We can't really affect the government, but what we can affect is our own decision. And once you realize you have that power, everything changes. Recent events aren't isolated incidents. They're all part of the same story, the story of how America will manage its unpayable debt through inflation and asset price increases, and why stocks like B the gold miner trading around $45 to $46 with a 154% gain in 2025, with an IPO catalyst coming, with activist investors pushing for value, with massive buyback and a $5,000 gold price target from major banks. Why that stock is positioned to be one of the best safe haven plays you can make right now? I thank you for watching. Remember, you can join Stocks Community at stockscommunity.com for a 7-day trial of daily stock ideas on what to buy right now.